Hey everyone, Steve Fernandez here with this week's edition of Market Insights. Today I want to show you why it is not too late to invest in EV stocks. I don't think there's been a better time than now. So before we get started, go ahead and hit the like button and subscribe. Get access to all of our content as soon as it comes out. Now, like I said, I don't think there's been a better time to buy EV stocks. When you look at what Tesla did, obviously people are thinking, well, we missed that rally. This rally is over. The market already knows about EVs and what's coming in that market. Now, I have to disagree. I think that the market is still severely underscoring the EV growth that we're seeing. Maybe not in Tesla, but other automakers, but more specifically materials companies that I'll cover later in the video. So EV sales are really crushing estimates right now. They just had numbers come out officially for 2021. It was 6.6 million EVs sold globally in 2021. That's above the 4.2 million estimate that IHS Markit had provided just a year ago, so January 2021. Pretty astonishing. And keep this in mind that overall new vehicle sales haven't been good. You can see in this chart that it really hasn't rebounded from that 2020 COVID low that we saw. And I don't really expect them to hit highs within the next couple of years, but I do expect EV sales to continue climbing. So after 2021, we're looking at 9% of global sales were EVs. Looking ahead, Bloomberg expects 2022 there will be about 10.5 million. And keep in mind, just 7 months ago, the same analysts at Bloomberg, predicted that wouldn't happen until 2024. So we're seeing huge sales momentum in EVs. Consumers want to park their money in EVs, no pun intended. And I expect that we will continue seeing these upside surprises, and I'll go over that here in a bit. Now, a lot of you have heard us talk about the semiconductor shortage, and that's another thing that's kind of surprising, that EVs have really been strong amidst the semiconductor shortage. So we're seeing producers constrained by supply in terms of semiconductors, but semiconductors are really ramping up spending. They never spent more than 110 billion until last year, where they spent 150 billion. Pretty big move in semiconductor spending. And I expect that to really enable more EV sales this year and into the coming years. What's probably most underrated with what's happening in EVs right now is the release of these light truck models. So light trucks being pickups, minivans, and SUVs. So in the US, it's a really big market for those. It's about over 70% consistently of total sales are light trucks. So the fact that we're now seeing these light trucks come to market, obviously we're seeing the Ford F-150 Lightning that we've talked about, the Chevy Silverado, other vehicles that are coming to market. The total percentage of global sales going to EVs has to increase. A lot of people are holding out on EVs because they didn't have those models before. So I think estimates are low. Like I said, these vehicles are now coming to market, and we're going to see these sales reflected in future financials. So, I think the market is really underscoring this growth. The auto industry, their actions are speaking volumes. They're committing 330 billion in spending through 2025 just to get new EV models on the road. So, if they think that this is the future and they think that there's going to be easily over 50% of vehicle sales coming from electric by the end of the decade, you have to assume that the people in the front lines doing this are right. Now, again, I'm confident that EV demand will not be an issue. What we're seeing now in terms of auto sales is not demand related, it's supply related. The recent sale numbers that I showed you just a second ago are proving this. And anecdotally, I don't know about you, but I haven't met anyone that really hasn't considered buying an EV. They're pretty cool. It's not even really the environmental concern. It's more, wow, you can get this vehicle for this much and I can save money over time. And, that's pretty cool. You can charge it in your garage for most people. The social sentiment about EVs is improving dramatically over time. Now, you do have to consider the reasons why someone would not want to buy an EV or the reason for buying it. You can see in this chart that the top concerns or considerations about EV buying from auto buyers, it's really heavily weighted towards range, price, and total cost of ownership. So The range right now on EV models isn't great. The median, so basically the middle EV, has about a 250-mile range. And I expect this to continue trending higher as battery tech improves. But we've seen EV manufacturers really rush to get some of these models to market. And with prices so high for raw materials, they're keeping the batteries a little bit lower range at the moment, but that will change. Also, price has been obviously a big consideration. EVs are more expensive, at least on a ticket price, than their gas guzzling counterparts, but it's probably less of a difference than you think. You can see about a $10K difference, a $10,000 difference between EVs and gas powered vehicles. And really, there's no difference almost when you look at the long-term total cost of ownership, about the same. And that's before tax credits. With state tax credits, it could actually be cheaper in some states. And lastly, charging infrastructure is really the big thing that will either make or break EVs. And we're seeing a huge commitment by the US government, and that was manifested this week. Biden came out with a plan that really allocated $5 billion over 5 years to build out a public charging network. Now, I can tell you from my research that most vehicle owners want to be able to charge their vehicles in a garage at their home, but it's not always possible for a lot of people. When you think about it, a lot of people live in apartments, or they may have townhouses without garages or driveways, so they're at liberty of whatever is available at that complex. And right now, that is relatively underdeveloped. I expect that to change, and as these chargers get faster, there's a focus on level 3 charging by a lot of these charging networks. As those come to market, the time to actually charge at these locations goes down, and it makes them more appealing, especially to people that can't charge in their garage. Now, you might be thinking, well, how do I invest in this, Steve? You haven't said anything about how to buy EV stocks. Obviously, Ian and I aren't as optimistic about the price of Tesla, and we think there's other opportunities out there. I really lean towards the materials side of the EV trade, specifically, battery materials. Obviously, lithium is the biggest component of lithium-ion batteries, and it's really causing a spike in the price of lithium. Now, it's not only batteries that are, car batteries that are fueling that price increase. It's also consumer electronics, for example. But EV growth and the upside surprise there, it's really sending the price of lithium and other battery metals higher. You can see in this chart that there was a huge spike in lithium in just the last year or so, over 400% increased since 2021 started. Pretty dramatic. So automakers are constrained by supply. If they can't get the materials that they need, they can't produce more vehicles. The only way that they can really make money is if they charge higher prices. And you probably understand that the auto market is really competitive. There's so many brands. Consumers are really price sensitive. So unless it's a luxury brand that really has that following, they're willing to pay anything, auto manufacturers can't pass on all of those costs. And it's part of the reason that we don't really see profit margins for automakers go up over time. They're relatively range bound. And I expect that might change slightly as the EV mix comes out. They might increase a little bit. But generally speaking, automakers are at liberty of what they are paying, and they're constrained on how much they can sell for. It's not necessarily the case for these material companies. Obviously, they're limited by how much they can produce in terms of the raw material. How much can they mine, for example? But the prices they don't have to be as constant. Like I just showed you with the lithium prices, they continue going up. EV makers or automakers have to buy these materials to put vehicles in these lots and sell them. And they're willing to spend up to get those materials. So I think it's really bullish for metal stocks, specifically EV metals. And I know Ian King and I are really bullish on one in particular. I can't really give it away on the video. That would do a disservice to our subscribers. But if you're interested in learning more about our report, go ahead and check the link below and give the video a watch. Now, thanks for tuning in to this week's edition of Market Insights. I hope you learned something. And again, it's not too late to invest in EV stocks. If I didn't convince you, I don't know what will. Talk to you soon.